You keep getting emails from your car insurance company asking you to download their Telematics app. They say you could save money just by letting them watch how you drive. Sounds great, right? But then you start thinking about it. They want to track your braking, your speed, when you drive, maybe even whether you're touching your phone, and suddenly that discount doesn't feel so free anymore. Today we're going to break down exactly what insurance telematics is, what these programs are actually measuring, who benefits the most, and when you might want to think twice before signing up. My name is Jim Eddington, and I run an independent insurance agency called Western Pacific Insurance. We offer telematics programs through our carriers, and we generally lead with them because they're a discount opportunity. Most of our clients who enroll end up saving money, but not everyone signs up, and that's a perfectly reasonable decision too. I've been on both sides of this personally, which I'll get into later. So let's start with what telematics actually means. Telematics is just a fancy word for technology that tracks your driving behavior and reports it back to your insurance company. The data usually comes from one of two places: either a small device that plugs into your car's diagnostic port, or a smartphone app that uses your phone's sensors to do the same thing. The insurance company collects that data over a period of time, usually somewhere between 90 days and a full policy term. Then they use it to adjust your premium based on how you actually drive instead of just using your age, your zip code, your credit score, and your claims history. The idea behind it is simple. Traditional auto insurance prices you based on who you are. Telematics prices you based on what you do behind the wheel. And for a lot of people, that's a better deal. Now let's talk about what these programs are actually watching. The specific metrics vary by carrier, but most telematics programs track 5 core things. First is hard braking. If you're slamming on the brakes regularly, the program notices. Second is rapid acceleration. Flooring it from every stoplight is going to show up in your data. Third is mileage. The less you drive, the less exposure you have, and most programs reward that. Fourth is time of day. Driving between midnight and 4 or 5 in the morning is statistically riskier, so late night driving can work against your score. And fifth, some programs now track phone use while driving. Not all of them, and not in every state, but distracted driving is increasingly part of the equation. These programs are generally more focused on how you drive than where you go. But some do collect location-related data, trip logs, or GPS-tagged driving events, depending on the carrier and the app. It varies, and we'll talk more about the privacy piece in a minute. Here's where it gets interesting. Not all telematics programs work the same way, and that matters. We work with carriers like Safeco, Progressive, Travelers, and Mercury, and each one handles telematics differently. Some programs are discount only. You sign up, you drive for the evaluation period, and the worst thing that can happen is you don't earn much of a discount. Your rate doesn't go up. Safeco's Right Track is a good example. You enroll, drive for about 90 days, and safe drivers can earn meaningful savings, in some cases up to around 30%. Every driver on the policy participates. The details can vary by state and program version, so it's worth confirming exactly how your carrier handles renewals. But the core idea is that you're not going to get penalized for trying it. Other programs can actually raise your rate. Progressive Snapshot is the most well-known example. If your driving data shows risky habits, your premium can go up at renewal. Progressive says most drivers who enroll save money, but some participants do see an increase. That's a real possibility worth knowing before you opt in. So the first question we ask when a client is considering telematics is, which carrier are you with? And does their program only reward good driving, or can it also penalize you? That changes the risk-reward equation completely. Telematics tends to be the best deal for a few specific types of drivers. Low mileage drivers benefit enormously. If you work from home, if you're retired, if you just don't drive much, mileage alone can earn you a meaningful discount. You're on the road less, which means less exposure, and the data proves it. Steady, predictable drivers do well too. If your commute is the same route every day at the same time, and you're not doing a lot of hard braking or aggressive acceleration, your driving score is going to reflect that. Younger drivers can actually benefit more than you'd expect. A lot of younger drivers are paying higher premiums based on their age group statistics, not their personal driving record. Telematics gives them a way to prove that they're not a statistic. Their actual behavior starts to matter more than their demographic profile. Multi-car households can also do well if everyone on the policy drives conservatively. Some programs apply one combined discount to the whole policy based on all drivers participating, so one safe household can see solid savings across multiple vehicles. And honestly, anyone who is just curious about their own driving habits can get value from these programs. The apps give you real-time feedback. You could see your scores, see where you had a hard braking event, see your mileage patterns. Some people find that the awareness alone makes them a better driver. Insurance companies have noticed that too. People who use telematics tend to develop safer habits over time, which is one of the reasons carriers keep pushing these programs. But telematics is not for everybody, and there are legitimate reasons to opt out. I'll give you a personal example. I had telematics on my Ford F-150, and it worked great for me. Steady truck, predictable driving, and I saved money on my premium. Then I got a Tesla. And if you've ever driven a Tesla, you know the acceleration is half the fun of owning the car. I made the decision to opt out because I knew my driving style in that vehicle was going to work against me in a telematics program. That wasn't a bad decision, it was an informed one. If you do a lot of late night driving for work, telematics may not reflect your actual risk accurately. A nurse driving home at 2 a.m. may be a perfectly safe driver. The algorithm just sees late night miles. If you live in an area with a lot of stop and go traffic, you may rack up hard braking events that have nothing to do with aggressive driving and everything to do with the car in front of you. And if privacy is a genuine concern for you, that's a valid reason too. Surveys consistently show that a significant percentage of drivers are uncomfortable with the idea of their insurance company monitoring their driving in real time. You're trading data for a discount, and not everyone thinks that trade is worth it. Let's be honest about the privacy side because it's the number one reason people hesitate. These programs collect real data about how you drive. Depending on the carrier and the program, that can include GPS coordinates of driving events, your phone usage while the vehicle is moving, and detailed trip logs. Most carriers say the data is used for pricing, underwriting, and program operation, but the exact rules vary by carrier, state, and app permissions. Some are more transparent about that than others. So the important thing is to read the terms before you enroll. Understand what's being collected, how long it's stored, and who has access to it. If your carrier's telematics program uses a smartphone app, understand that the app may request permissions beyond what's strictly needed for driving data. You have the right to ask questions before you opt in. We walk our clients through this when they're making the decision. It's not something you're forced to do. You always have the choice. One thing worth mentioning if you're watching from California. Most of the major telematics programs that are common in other states are either unavailable or much more limited in California. Proposition 103, which has been on the books since 1988, restricts the rating factors insurers can use to set premiums, and behavior-based telematics data hasn't cleared that bar. There's ongoing debate about whether that should change, but as of right now, if you're in California, your telematics options are going to look different than what drivers see in most other states. So here's how I'd think about this if you're on the fence. Start by asking your agent which telematics program your carrier offers and whether it's discount only or whether it can raise your rate. That's the single most important question. Then think honestly about your driving habits. Are you a steady, low mileage driver? You'll probably save money. Do you drive a performance vehicle and enjoy using it? Do you work night shifts? Do you spend a lot of time in heavy traffic? Those factors might work against you in a scoring algorithm, even if you're a safe driver. If your carrier offers a discount-only program, the downside is basically zero. You either save money or you don't. That's an easy yes for most people. If your carrier's program can raise your rate, weigh that against the potential savings and make an informed choice. And before you enroll, ask your agent what happens if you decide to opt out partway through. Some programs let you on-enroll, but others may adjust your rate if you quit before the evaluation period ends. It's worth knowing that up front so there are no surprises. If you want help figuring out whether telematics makes sense for your situation, we're happy to walk you through it. We write auto insurance in Nevada, Arizona, Utah, and California, and we work with carriers that offer a range of telematics options. There's a link below where you can get a quote, or you can just reach out and we'll talk through it with you. Thanks for watching. I'll see you in the next one.